Still stuck. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of May 7th, 2018. I'm recording this on Sunday, May 6th, 2018. And I say the market's still stuck because we haven't broken out into a clear direction. In fact, the market is compressing into a pretty narrow range. And let me offer some technical analysis, some drawing here to try and point this out. First, this year we've had a pretty significant low. This is a lower high, meaning it went up, but it didn't go above, this high here. Went on to a lower low, broke down through this low just barely. A lower high, didn't go above this high, and it pulled down. Now, I've got some lines drawn really here. I'll highlight it here and here. And currently, we're stuck in this range right here. And let me clean this drawing up. Now, we're also using technical analysis. We're between some key levels. We've got the Ichimoku cloud, which is projecting right now a downtrend and some resistance to upward price movement. And we've got the 200 moving average, this white line here, projecting a support level. So we're between a support level and a resistance area. And the market continues to move between them. And let me go ahead and use another drawing tool. We're also forming a bit of what's called a wedge or a pennant. And you can see here's the top edge of it. There's the upper level, and then down here it's pretty well conforming to this. And you can see it looks kind of like a college pennant or a wedge. And so the swings are getting narrower and narrower and narrower, and that seems like a market maybe that's stabilizing, but it's not. It's building up pressure, kind of like a volcano that is ready to erupt. And when it breaks out of this wedge, and the technical indicators here are showing some levels, if it breaks up through the Ichimoku cloud above this upper portion of this wedge, probably on to some pretty dramatic highs. If it breaks down through the bottom of this, through the 200 moving average, through this bottom of this wedge, probably some dramatic lows coming. Because we're putting in lower lows, lower highs, lower lows, lower highs, because we have negative momentum, because we're under the Ichimoku cloud, it's projecting a downtrend, and because we're at the end, we've had a 9-year bull run, those technical factors make me lean toward a break toward the downside, but that remains to be proven. So the conclusion of that's no clear trend. We need it to break out to establish a direction. I'm biased toward the downside. And for all the price swings and the drama and volatility that we've had in the market year to date, where do we stand? Well, flat. Year to date, the S&P 500 is down 0.38%, or essentially flat. So we've gone nowhere in a very volatile fashion. So tough market to trade in, that's for sure. We've got conflicting, really good news, good earnings on one hand, global tensions on the other hand, lots of things in play. Last week Apple announced earnings. They surged up pretty strongly on their earnings and on the news that Warren Buffett's going to be investing pretty heavily in increasing his holdings in that company. Other, the financial sector has reported amazing earnings. And despite that, the market for the week closed down. Even for the last couple of weeks, it's down. So I think people are struggling to find, what's the really good news that would continue this rally up into new record levels versus potential bad news that could initiate the correction, which historically we're just about due for, in fact, overdue for. So I'm not, calling for the apocalypse or anything like that. I'm just, retreating into the reality of technical analysis, what the chart's telling us. And the chart's telling us that price is compressing, there's a bias to the downside, and we'll continue to trade that way. I'm not a bad news bear. I'm not only trading short. We've got long positions as well, some of them doing very well, and just initiated some new ones last week. But we're keeping an eye for sure on these key price levels. So if we break down and get a definitive close on the S&P 500 below 25.99, not just we wicked down through it on last Thursday. I mean a definitive close, several points below it, closing below it. Or on the other hand, if we close above this level, which is about 27.08, definitively close, several points above it with a close, that'll tell us probably which way the market's going for the next several weeks or few months. So we'll continue to watch for that. It's a tough place to be. It's hard to predict. I've said a couple times I am biased to the downside, but I'm willing to accept it if the market declares. The reality is it's heading up, and we'll be taking advantage of that as well. But for now, we just have to wait and be patient, and that's probably the hardest thing as traders. Is we want to take action, we want to take trades, we want to get involved in the market, and sometimes we just have to wait and let the market tell us what it's going to do. So there are other markets, other stocks, ETFs that are moving independent of the indexes, but the majority of stocks move with them, so it's harder to find good trades, and we just have to keep our powder dry, keep some capital available, be careful, and wait for great trade setups when they come. So that's where we're at for now. Let's go ahead and take a look at gold and oil, as always. So here's the daily gold futures contract, and it's a bit of a mess. The big picture is we've put in highs, higher lows, new highs. It's consolidating, taken out a few shorter-term support areas, then rallied pretty radically. It's right under the 200, under the cloud, and we'll have to see. It is not, in times of uncertainty and certainly in corrections, typically and historically gold and other precious metals move up. It has not done that, so we have to wait for further proof. So there's no trade on gold at this time. There could be in the future if it starts to break out and show positive patterns, but nothing there at this time. More indecision and confusion. Oil, on the other hand, no confusion here. It's in a rally, and this was a wave 3, this is a 4, this is 5. Target for wave 5 is between $71 and $80. Good news if you're trading oil, bad news at the gas pump, and this trend looks like it is gaining steam and will continue. So pretty clear bullish move. Not a ton of profit left. We're hovering right just under 70, currently 69.78 on the crude oil futures contract, but a bit of profit left. So indeterminate on the S&P. It's narrowing down into a pretty tight range. We'll probably break out sometime in the near future. Gold's a mess. Could head up if the markets break down. Oil is in a really strong trend, and that's really the reality that we're facing right now. So stay tuned. If things change and get clearer, I'll certainly be giving an update. Take care, thanks, and as always, I welcome your comments, your questions, and your feedback. All right, bye-bye.